Okay, so you're keen to get a quicker handle on complex trading stuff, right? Especially for the Nifty 50.
Yeah, cutting through the noise.
Exactly. And maybe finding those key trend shifts. Well, that's what this deep dive is all about today.
We're looking at the parabolic SAR. It's a technical indicator, and honestly, it can be pretty handy.
Especially if you're maybe newer to trading the Nifty.
For sure. Think of it as a way to see the market's direction, and crucially, when it might be shifting gears.
Right, and we've got a step-by-step walkthrough ready using some simplified Nifty numbers just to make it clear.
Yeah, hypothetical data just to show the mechanics,
Yeah.
how it's calculated, and how you might actually use it.
So our goal here is simple. Give you a clear, easy-to-grasp idea of what the parabolic SAR is and, how it could potentially fit into your own Nifty trading.
Let's dive in then.
Okay, so the parabolic SAR, what's the core concept? What's it for?
Fundamentally, it aims to do two main things. Parabolic SAR stands for stop and reverse, by the way.
Stop and reverse. Okay.
So first, it helps you identify the current trend. Is the Nifty generally moving up, or is it heading down?
The basic direction.
Exactly. Second, it provides potential clues, signals maybe, about when that trend might be losing steam or even turning around.
And on a chart, like a Nifty chart, what does that actually look like? How do you see it?
You'll see dots, little dots plotted either above the price bars or below them.
Okay, dots. Simple enough.
Yeah, and the position tells the story. Dots below the price. That suggests an uptrend. Think potentially bullish.
Buy or hold territory, maybe?
Could be.
Hmm.
And if the dots are above the price bars, that signals a likely downtrend. So you might think about selling or shorting or getting out of long positions.
Got it. Below is up, above is down. Now, I see these terms mentioned. Acceleration factor, extreme point, SAR itself. What are those?
Right, those are the sort of building blocks of the calculation.
Yeah.
The acceleration factor, or AF, it starts small, typically 0.02, and it increases incrementally each time the price hits a new high in an uptrend or a new low in a downtrend. But it has a cap, usually 0.20.
So it accelerates as the trend confirms itself.
Precisely. Then there's the extreme point, the EP. That's simply the highest high price reached during the current uptrend
So far.
or the lowest low price seen in the current downtrend, the most extreme price in the direction of the trend.
Makes sense. And SAR?
SAR is just the calculated value of the indicator itself for that specific day or period.
Okay, let's make this concrete. Can you walk us through a calculation, maybe with some made-up Nifty numbers?
Sure. Let's imagine a few days. Day one low is, say, 28,800. Day two high hits 2,100. We'll assume we're starting in an uptrend.
Okay, initial uptrend.
So for calculating the SAR for day three, our initial SAR is usually set to the low of the prior period, so day one's low, 28,800.
Right.
Our initial extreme point, EP, is the highest high seen so far in this trend, which is day two's high,
Yeah.
2,100. And the acceleration factor, AF, starts at its minimum, 0.02.
Got the starting values. How do we get the SAR for day 3 then?
Okay, the formula for an uptrend is SAR for today equals SAR from yesterday, plus the AF multiplied by the difference between the EP and yesterday's SAR.
Okay, SAR today, I'll get SAR yesterday, plus AF, EP SAR yesterday.
Exactly. So for day three, it would be 21,800 plus 0.02, 2100, 100. That calculation gives us 21,806.
21,806. And then what?
Then you check two things for day three. Did day three make a new high higher than the current EP, 2100? If yes, you update the EP to that new high, and you increase the AF by 0.02 up to its max of 0.20.
Okay, update EP and potentially the AF if there's a new high.
Right. And the second check, crucially, is the calculated SAR, 21,806, still below the low price of day three. If it is, the uptrend signal continues.
Ah, so the SAR needs to stay below the price action to confirm the uptrend.
Correct. You repeat this process each day, update EP and AF if new highs occur, calculate the new SAR, and check if it's below the day's low.
But what happens when it, stops being below the low? What triggers a reversal signal?
Good question. In an uptrend, the reversal signal happens when the calculated SAR value for the day actually moves above that day's low price.
The dot flips over the price bar, essentially.
That's the visual cue, yes. When that happens, the indicator suggests the uptrend might be over. For the next day's calculation, you switch modes. The new SAR is set to the previous EP, the highest high reached in the just-ended uptrend.
Okay, so the old peak becomes the starting SAR for the potential downtrend.
Exactly. The EP resets to the low of the day the reversal occurred, and the AF resets back down to 0.02, ready to accelerate if a downtrend develops.
And the formula stays the same.
The formula itself is the same. SAR today, R yesterday, plus AF, EP is SAR yesterday. But now, in a downtrend, The EP is the lowest low, and the AF increases when new lows are made. And you check if the SAR is above the day's high to confirm the downtrend.
Okay, I think I'm getting the mechanics. So how do we actually use this in practical Nifty trading?
Right, the application. Well, first, basic trend identification. Dots below price, you might lean towards looking for buys or holding existing longs. Dots above, maybe think about sells, shorts, or exiting longs.
Using it as a visual trend filter?
Yep. Second, it can act as a trailing stop loss. The SAR value itself provides a dynamic level. As the Nifty trends up, the SAR dots rise too, trailing below the price. If the price drops below the SAR dot,
That could be your exit signal.
it could be a signal to exit, locking in profits or cutting losses.
Yeah.
And third, that flip we talked about, SAR moving from below price to above, or vice versa, that's your potential trend reversal signal.
So trend stops, reversals. Anything specific to keep in mind when applying this to the Nifty index?
Definitely. The big one is market condition. Parabolic SAR works best, really shines in markets with strong, clear trends.
Up or down just needs direction.
Exactly. If the Nifty is just chopping sideways, range-bound, the SAR can whipsaw you. It'll slip back and forth, giving lots of false signals.
Right. Gets noisy in choppy markets.
Very noisy. That's why it's often recommended, strongly recommended actually, to use it with other indicators.
Like what?
Maybe a moving average to confirm the overall trend direction, or something like the RSI or Mansi D to gauge momentum or spot divergences. Don't rely on SAR alone.
Makes sense. Combine tools. What about time frames for Nifty?
Depends on your style. Daily charts are common for swing traders looking to capture larger moves over days or weeks. For intraday trading, some might use 5-minute or 15-minute charts, but be aware the signals will be much more frequent and potentially noisier.
So, using our example, maybe you saw the SAR below price on day 4, potentially entered long, and then on day 6, it flipped above the low.
That could be your signal to exit the long trade based purely on the SAR.
Got it. Okay, any final quick tips for beginners wanting to try this out?
Number 1, demo account. Practice first without real money.
Always good advice.
Definitely. Second, use charting software. Pretty much all platforms calculate SAR automatically, so you don't need pencil and paper in the heat of the moment.
Focus on the signal, not the arithmetic.
Right. Third, risk management is key, always. Decide how much you're willing to risk per trade before you enter. And finally, again, be super cautious if the Nifty looks choppy or directionless. SAR isn't the right tool for every market condition.
Excellent points. Okay, let's wrap this up. What's the main takeaway message about Parabolic SAR for Nifty traders listening?
I'd say it's a useful tool, visually intuitive with the dots, that helps you gauge the Nifty's trend direction and, crucially, provides potential points for stops or alerts you to possible trend reversals. Just remember its limitations, especially in non-trending markets.
Great summary. So here's a thought to leave you with. How might using the Parabolic SAR on, say, both a daily Nifty chart and an hourly chart give you a different, perhaps more layered perspective on potential trade setups or exits? And maybe think about going onto a charting platform and actually backtesting the SAR on historical Nifty data. See how it behaved during past trends and sideways periods. Could tweaking those default settings, like the AF, make it work better for your style? Something to explore as you delve deeper into Nifty analysis.